All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy Tuesday to you. You know what? I actually had a bit of an I had a bit of a nightmare last night, and I realized that I had a bit of a nightmare last night, and I woke up this morning and realized it's all true. I woke up last night in a panic, and I go, "Oh my God, it's only Tuesday." And for some reason in my dream, I thought it was Friday, and then I had a nightmare that it was only Tuesday in my dream. So in my dream, I had a nightmare, if that makes sense. And then I woke up this morning and it is only Tuesday. It sucks. This weekend feels like, I don't know why it feels like it's so long. It's only one day in. It's crazy. It's one of those weird situations. Anyway, we got everybody tuning in right now. Let's I was just playing the euro dollar on the long side just a little while ago in the chat room, and Benedict's in the chat room saying that I doubt the euro dollar breaks through 121. I really don't disagree with you. Hold on really quick. I'm going to just tell him I am addressing this on air right now. I don't disagree with Benedict and his comments saying that I don't think it breaks below 121. I don't think it breaks below 120.90. I don't think that this. I think the 618 will hold going into tomorrow. I would think that we bounce back to 121.60, and we sit in this range right here, pretty much going into tomorrow. So, I pulled a little bit of profits on my euro dollar long. I probably should have just stayed in longer, but I just don't want to deal with it. I made some money overnight, and it's like, okay, I don't want to be greedy. I could probably squeeze more out of it because I got long at 10 or, right here. So I could probably squeeze more out of it if I wanted to stick around for today. I don't think that that's, necessarily a bad thing. What I'd rather do, to be honest, is I'd rather see a rally back to 121.70 and position myself long the dollar, short the euro going into tomorrow. So what I'd rather do, I feel more comfortable at this point being long dollars, believe it or not. I'd rather be a seller right here tonight, right? That's what I would rather do. So I'm just kind of giving you guys a heads up on how I feel right now about where we're currently at. But anyway, so let's remove that. Okay. Okay. Just grabbing a sip of my coffee. Sorry. All right, so let's figure out where resistance is going to be for the euro dollar on these rallies. The 618 comes in at 121.71 from there, which is close to a 50% retracement of the entire move. So I would say that the underside of this trend line comes in 121.70. I think that is resistance today. Personally, I think if you can get a short off there, I think it's great. I think 120.90 is really key support. I do believe that that's going to hold. And I'm going to keep us in a range near term. Cable. So a little false breakdown, stops below these levels. I was really hoping we'd make it down to 140. I wouldn't mind being long. I wouldn't have minded being long the cable on a bounce. Unfortunately, I just don't think it's going to make it down there. I think this just actually stopped out a bunch of longs. Hopefully Amanda's in the chat room, not short right now. Because I hadn't been paying attention the last few minutes. I was dealing with something else for the last 30 minutes. So I'm not up to speed with what everybody was doing in the chat room. But yeah, that looked like just a straight up stop run ahead of the North American Open. So with that being said, let's go here. Remember, that's previous channel resistance. I betcha. Trying to think, I want what. I mean, this is all very messy. Obviously, the 127% extension of this move held, so that comes in at, well, we're gonna have to write down the lows, but you can see that comes in at 140.42. So today, I'm gonna say any dip back down to 140.40 is gonna hold, in my opinion. Oops. 140 is obviously really key support. I mean, you see this here. %38 retracement comes in at 141.15. I would say that's resistance right now. Okay. Oh, I'm such a wussy. I'm such a wussy. I should have just stayed in the euro. I knew I should have. What a wuss. Do you guys understand the and I want to hear your comments here. Do you guys understand how difficult it is for me to trade and do this webinar at the same time? Like, to sit in like when I'm one of the things that actually gets me out of, like, I was long some euro. One of the things, because I was just day trading it. It's not like, I didn't want to stick around too long. Do you understand it? Like, for me, I'm trying to do a webinar and trade at the same time. Like, I'm trying to give you guys analysis and trying not to be biased, but also trying to trade at the same time. A lot of times I just have to pull the trade off. It's like, okay, I'd rather just take a few pips, lock it in. I got to start the webinar. This way I'm not distracted, so I can give you guys my full attention and give the chart. Do you understand? Craig says, can't say, we have to swap sometime. Yeah, I've been doing this for years. Obviously, I've been doing live analysis and then trying to trade at the same time for almost 20 years, off and on. And it never gets easy. So anyway, so I should have stuck around in the euro, but anyway. Let's go over to the Aussie. So here's the Aussie. Obviously, we're at a pretty big support zone. The last ForexAnalytix update, you guys should have known when we were down at 76.90, big support. This is developing into a triangle, and it's symmetrical too. You can see the highs through here, lows through here, which is good to know because that makes this really important. And oosh, I didn't want to do that. Dang it. You know what? Forget it. Delete it. Oh my God. This is ah! Fudgesicle. Oh my
Just
God.
move on to something else, man.
Dude, I can't move it. Okay. What the? Oh my God. That's what makes these two levels really important, is what I'm trying to say, Stelios. Christ almighty. Oh my God. I'm going to just literally, I'm going to go outside and just, there's all these people like walking their dogs in my neighborhood right now because it's like 80. Oh, for crying out loud. Can you hear my dogs?
Speak of the devil, yeah.
I'm going to go outside and just punch one of my neighbors just to, because I need to get it out of my system right now. Holy cow. All right. So 78 cents is resistance, and this is going to be triangle resistance around 78.20. Support probably about 76.70. And just be respectful of these areas. It's a balmy 85 degrees outside, and people are like, I have to walk my dogs now, because if I don't walk my dogs now, I can't do it in 115 degree weather later at 6 o'clock in the morning. That's the mindset of most people right now. So we're going to be very respectful of that triangle at the moment. Kiwi. Obviously at support zone, the bottom of the support. Well, let's just mark up 71 cents. If we break through 71 cents, the Kiwi is going to have a field day to the downside. That would be only happening tomorrow. That's obviously really key support. Resistance, this trend line has been holding. So if you can, this is one of those, if I could get a short off tonight at 71.80, I would be willing to do that. So if I could get a short somewhere around this 71.80 level, I'd be willing to do that. There's a, this is all about trying to position yourself ahead of the news, right? Trying to get yourself in a decent position. And the Kiwi would be, this would be an example of that. Like if you feel like the Fed is going to be a little bit more, just less dovish. I mean, we expect a dovish Fed, but let's say that we expect the Fed to be a little less, or maybe the Fed becomes a little less dovish. Then your best bet would be being short up here as tomorrow, as we come, pre-FOMC, we're right here. If you get in a decent position where you're short the Kiwi and you're up 40 pips, great, because then you just move your stops to break even. If the Fed's very dovish, then the Kiwi heads back to 73 cents. But if let's say the FOMC is actually a little bit more hawkish than had expected, and we have we get the idea that the Fed is actually going to be tapering sometime in the very near future, then the Kiwi breaks down, and then you're in a nice profitable position. So I'm actually going to put in an order right now. $71. Oh, shoot. So I'm going to try to get short at 71.74. Personally, so we'll see. Let's put that in. We'll see if I can squeeze out a short up here. That's what I'm thinking. So, And like the same with the euro, if you can get a short, off somewhere up here, I'm going to do that as well while I'm thinking about it. Like this 121, like 60s, I think. So, because there's the 618. I don't know if we're going to get all the way up there, though. The market could completely go flat between now and then. So here's the Canadian. Now the Canadian, as you guys know, we just hit new trend highs. As I was saying on the FA.C.E webinar, RSI is divergent. I already sold my dollar Canadian at 87 this morning, or 88. I wouldn't mind buying it again on a dip back down to 121. I think that this support's going to be pretty key. You notice how we dropped this trend line yesterday? I know we talked about it on the roundup. So instead of having it at 121.50, we dropped it across the tops here, and that held. So that means that 121.30 is going to be really important support now. I think we have to be bullish near term to 122.70. Okay. Which would complete the range extension. We have some previous supports from over here. All these lows from over here. I mean, so that seems doable, but ahead of that, we're going to see 122.25. So this is one of those that if you can get long on a dip, probably not a bad idea. Dollar Swiss. $90.70 is the 200-day moving average. 89.30 is still support, and we are smack dab in the middle of this range. And I'm going to leave that in range right now because I know we've been putting it down while we're below the 200-day moving average. We should remain bearish, but frankly, at this stage in the game, we are starting to carve out lows, and knowing that the Fed's tomorrow, we probably need to keep this more in range, right? We have a lot of work to do if you want to turn bullish the dollar Swiss, and we're going to have to see a substantial move higher in yields, which, I was talking to Chris Weston last night, since we're doing this Pepperstone, we're doing this like special for you guys here the next few weeks. And he's like, how do you feel about yields? I'm like, constructive. They're bullish technically. So, and is this going to feed into eventual dollar strength? I think so, but you can see that structurally we're bullish here. I mean, on yields look like they're going higher, at least for right now. Even if we correct to the 38% retracement, it's still, I would argue that it's pretty bullish. So with that being said, you go over to the Swissy, and it's like, it's hard to be really bearish if yields are going higher, and they look like they're going higher. I would think that being long the dollar Swiss is the right trade right now. So because I'm saying all this, I have to take this designation off of bearish and flip it to range until we get past tomorrow. I think we're going to have a lot more answers after tomorrow, right? US dollar, Norwegian krona. You guys know 824, 842, and I'm going to leave it on. I'm going to leave it as range. US dollar, Mexican peso. I don't know why I had that there I've had that there for a couple of weeks, and it's like, why is that even there? That should be right here since last week. I don't know. I think I've kept dismissing it because I'm looking at the overall view as being more constructive because of this false breakdown, this support here as being the Wyckoff, accumulation low. I still believe that to be true. 1957, and then we'll obviously have to write 2022 and then 2030. So and I think while we're above 1978, and then I'm gonna put 1955. We have to be targeting 2022, 2030. That should be pretty key. And I'm going to keep us in range. Okay. Simon says, how good is your video editor team? I don't know why you asked that, but why?
That's when you were faffing about with the with TradingView.
Oh, with this?
Yeah.
When I was doing this?
Rectangle gate. That's a good one.
It's gonna drive me crazy. You might have thought I lost it there for a few minutes, didn't you? Felt like I was coming unhinged, unglued. This is what the Fed does to me. All right. Dollar yen support, channel support, 109.30, 109.20. It's actually it's going to be 109.20, and that's really key now. That has to hold. That has to hold for the bulls. The bulls. 110.30 is resistance right here. Dollar index, as I mentioned to you guys on the FACE webinar, I really think we're going to end up being right smack dab in the middle here by tomorrow. No matter what happens today, whether we do this, we're going back to the square by tomorrow. My opinion is. So we're going to find ourselves mid-range. That means resistance is at 90.84. Support here at the breakout point at 90.30. And that's it. And we're in a range. Okay. And pretty much everything is in range ahead of the Fed, because the Fed is, whether you like it or not, they're the drivers tomorrow, and however you believe, whatever you believe is going to happen is fine. It's your opinion. But to be honest, no one knows. And we're going to have to react to the reaction tomorrow. You can try to position yourself, which I'm going to try to do. Like I told you guys, I'm going to try to sell some euros a little higher. I'm going to try to sell some Kiwi a little higher. Hopefully we get that opportunity. It's hard for me to see this opportunity taking place when I'm sitting here looking at the equity markets this morning, and all the big indices are selling off and the DAX is rolling over. So it's hard for me to see the euro trading at 120, 160 with that happening. But who knows? It's all position squaring ahead of the Fed. So support right now, I'm going to write down for the S&P, going to be these little spike lows here, because this is what's keeping us from hitting really lower lows. That comes in at 42.10. Oops. Resistance 4,300. This has to be bullish, and matter of fact, it's bullish while we're above 41.50, which will be right here. Oops, actually, it's now 41.65. Okay. Bitcoin resistance 42,500. I still believe it's bearish while we're below that. And you know what's interesting? Look at the price action here in Bitcoin. I've been kind of following it after it broke higher because I was like, man, if it could just get back up to 42,000 and not really disrupt any market. It's interesting because Bitcoin on the downside hasn't affected risk appetite, and to the upside, it really hasn't affected risk appetite either. So it's really moving on its own at this stage. But you'll notice that the 38% retracement is right here. Let me get rid of that for a second. Okay. So the 38% retracement is right here, and that's really capping us right now. But like I said, I wouldn't be surprised if we move past that just to probe. It's the 200-day moving average up towards this resistance is 43,000. 43. Actually, I'm going to write that down. I'm going to give it up to 43,000. I wouldn't be surprised if we just kind of stab up there. But this breakout point's holding, and that's one of the other things that's pretty interesting about Bitcoin is it's not pulling back. You would think that, I thought, maybe the probe above 40,000 yesterday was just that, just it's kind of moved up there and, stopped out all the shorts. But really what we're doing is we're holding above this 39,400 level. I think we could dip all the way back down to this area. So I'm going to write down all the way down to about 38,000. And actually, let me keep it in range for now. I think we need to stay bearish while we're below the 200-day moving average. But the thing is if we get above 43,000, we get above here, we are going to squeeze. I wouldn't be surprised if we make it above 43,000, we squeeze back to like the, somewhere up here. Actually, we can go all the way back up towards these levels. I mean, 618, 786, all the way. I mean, this is all doable if we squeeze past the 200-day moving average. So personally, I feel that we have to be bearish while we're below the 43,000, but I think it makes sense based on the Fed, based on everything that's happening, and Bitcoin breaking back above this wedge, resistance. I think we just need to keep it in range for now. Oh, there it is. Sorry, I was actually looking for this lower trend line. Let's go over to silver. Oh boy, what do we do here? So I'm going to write 2830, support this spike low, right? 2730 and then 27. So I think that's what I wrote down yesterday, if I'm not mistaken. Let me take a look. 27, 2730, 28 and a quarter. You guys know I don't go back and look at this. Once it's done, it's done. I don't go back and look at this because I don't let it influence what I'm doing today. I know we wrote 28 and a quarter yesterday, but the trend line comes in at 28.30. Gold, 1842 is the 127% extension. And this was the big, remember, we we've been writing 1845. I think yesterday we went down to 1844 and a quarter, if I'm not mistaken. I'll tell you right now. We went as low as 1844.63. I'm going to have to go ahead and pat myself on the back for writing 1845 about a bazillion times the last 3 weeks. We have to stay bullish while we're above that. It's the 200-day moving average. Well, now the 200-day moving average has actually slipped a little lower to 1840. That's okay. Resistance is back at 1900 because, or whatever this is. Okay. Triangle. $18.95. Okay. That's resistance. All right. There we go. Everything's done. And I'm not sure if Steve made it back today. I know he was stuck in traffic earlier, but Stelios is here for sure. Hey, Stel.
I'm here, of course I am.
Oh, hey, Steve. We missed you earlier. How's it going?
The slacker's back.
Good. Yeah, the slacker is back. What's up, Steve?
Good. How have you been?
Have you seen me try to draw on my Aussie dollar chart yet? Oh, you missed it.
No, I didn't miss it. I wasn't watching because I was doing some video work, but I heard you.
I can't move it.
Yeah.
I have to move it like this, like that. Hold on. Yeah, nothing. Doesn't work. Simon called it rectangle gate. So, anyway, well, we're pretty range bound, guys, ahead of the FOMC. As you know, you notice everything but the dollar Canadian, because the dollar Canadian acted well, and it acted perfectly. I was long yesterday. I didn't have the best price in the world. My average was like at 54, 55. I sold it this morning at 87, but I was playing this. And if you look at, the dollar Canadian, it's really like it's one of the only like well-behaving currency pairs at the moment that's like doing what it, technically what it, if it makes a pattern, it's playing out the pattern, basically. On an intraday basis, everything else is very sloppy. We're getting a lot of false breaks. We're getting a lot of, and which is actually pretty surprising when you talk about the Canadian, because crude oil is so damn strong. I mean, look at crude. We're at highs right now, back at $72 at highs. And crude looks like it's going to 74. So surprising the Canadian is as strong as it is at this moment, but I think we have to respect it. So
maybe the market thinks oil is transitory and it's going to be back to $50 within a month.
Maybe, I'll tell you at some point. So let's talk about a couple of things since the three of us are here really quick. You have here in the United States, I'm going to talk about the US, and then, maybe different, obviously, in different parts of Europe or different parts of the world, but I'm going to speak specifically about the US. Housing and home prices have gone absolutely through the roof this last year, 2 years, and actually the last several years, the last 2 years. We have a mortgage eviction foreclosure moratorium coming off like at the end of this month. Like literally starting in, this summer, banks are going to start foreclosing on people and evicting people.
Yeah.
That's going to free up a lot of inventory. We've been faced with a plethora of a mix of reasons why, real estate's gone higher. Obviously low rates, low inventory, because everybody's trying to search for homes. We've had, commodity constraint, so it's kind of stopped up builders, and builders have been reluctant to buy more, lumber or different things. And I've spoke to builders. One of the parents that had just gone this weekend is a new home builder. He works for a new home builder. He's like one of their directors or whatever here in town. And he's like, yeah, we're kind of, and they're private. So he's like, yeah, we've been kind of hesitant on paying up like a few months ago on some of those prices, and so you've got a constraint there. You've got people are constantly searching for I'm now faced with the reality that I'm going to be working from home possibly forever. And I'm in a small home. I need to upgrade. I need to find a house that has an extra bedroom, so I have a permanent office. That's what a lot of Americans are faced with now because of COVID. COVID's changed how we work. So we have this, mix of reasons why real estate prices have been high. And then you have, a foreclosure moratorium that has been in place since COVID. Well, that's coming off. And you're going to have all this, why did we get in this conversation? Oh, we're going to have all this. I don't even know why we're having this conversation. There was a reason. I remember there's a reason why I was going down this road, but we're going to have all of these homes, probably coming to market. And that's, I think that's going to hit housing, but how's that going to, why are we having this conversation? We were just having this conversation for a reason.
I don't know. You started, but you know what? I want to add something. Yeah. There's going to be supply coming into the housing market. There might be a correction, but you know what? These new generations of people, and myself included, but I think the younger people, the way they see it is that you have to get onto the housing ladder, right? You have to have a house because this is something that's going to keep going higher and higher due to inflation. And that's true, right? This is something that's going to keep going forever and ever. So any kind of dip, any kind of meaningful dip in housing, I think is going to be met by huge interest.
Always.
And always. And if rates are not high, I mean, if rates are, a 30-year mortgage is what now? 3%, or what is it in the US?
Yeah, maybe 3%.
Even if it's, even if it's 4%, it's still in the grand scheme of things, not a lot.
Pre-COVID rates here in the US were at like 5.5%. I actually refinanced. I refinanced because
last year, right? If I remember.
Yeah, we refinanced. Yeah, 6 months ago, maybe. Because we were at our rate was at from 3 years ago, our rate was at like 5.25% or 5%. And I refinanced at 2.5% or 2.25%. So 2.4, something like that. I have to go back and look. But
to be honest, Blake, I would be much more inclined to lend you money at 2.5% than lend Greece money for 5 years for negative interest rates. So all good.
but Stelios, to your point though, rates, if rates do go higher and you have, which I feel that rates have to go higher, even if it's slightly, and you have all these, I guess you have, here's one of the other things. I know a lot of people here in town where I live, where I live, and it's different than where you guys live, obviously. Where I live, people have made their money in real estate generationally here where I live. Because to give you guys some just some understanding, in 1970, 1996, when my father moved our family here to the city I live in right now, there was 500,000 people. 500,000, 500,000 people. Now there's almost 6 million in this metro area. So the growth in where I live has been so ridiculous in my lifetime that you can imagine how everybody that lives around here where I live, it makes their money from real estate, right? That's just the predominant theme. But most of them, if the real estate market goes sour, it crushes our local economy, and it did during the housing crisis, the financial crisis. Do you think we're going to be faced with a similar type of situation with housing prices?
Who's that aimed to, me or Steve?
Oh, and it doesn't matter. Do you think we're going to see housing prices come down sharply? There's a lot of people that I've talked to that believe that they will.
As always, I have to ask a very important question. Are we talking about real or nominal prices? Because if you're asking me if I think it's a big danger after the previous experience in 2008 for it to happen in nominal prices, I think the danger is less than it used to be. If I believe it is a big danger and it will inevitably happen in real prices, I think it's a very big danger, yes.
Yeah, and real prices meaning that
I doubt they'll let the housing market deflate in nominal terms.
Yeah, interesting. Well, guys, I'm going to let you take over. I've gotten on some tangents today, and I think this is all pre-FOMC craziness for me. Hopefully you guys didn't, get caught too short. The sterling down here below that 140.70. It's popped up quite nicely. The euro's kind of recovered. I am looking for a little bit higher price, a little bit weaker dollar heading into the FOMC, but I think ultimately we're going to be probably around these levels, as the FOMC hits tomorrow. So this might not be a bad day if you've made some money to stand aside, go rearrange your sock drawer, because Stelios, I'm sure his socks need to be folded, and so do yours. And so I'm gonna let you guys go through the markets here, and I'm gonna leave you. So here's the bias chart from today. So thanks everybody. I'll see you in the chat rooms.
Thank you, mate.
Oh, and by the way, Jason, if he's listening in, Jason had asked a little bit earlier about. He asked, don't people expect that the Fed is going to, I think he asked something on our webinar.
It's going to be dovish today.
Yeah. Aren't they already expecting a dovish Fed? But look, when have you been disappointed being long risk going into the FOMC? There is going to be a time when that changes, right? There's going to be a time when you're long risk and the Fed's going to be less dovish and more hawkish, and it's going to catch you off guard. But more times than not, they have failed to disappoint, right? So anyway.
That's the business they're into.
Yep. All right, guys. I'll let you go.
Thank you, Blake.
Bye-bye.
Okay, so we talked about the Fed on FA.C.E. You weren't there, but I basically said that they really should have already done something given inflation, given everything. We have this ultra accommodative monetary policy, which from the data, shouldn't really be justified. They tried to convince us that this is transitory and they've done nothing. But I fear that Jay Powell, being who he is not going to do anything again tomorrow. But let's see. What was I going to say? We had some data today probably worth mentioning. UK average earnings index 5.6% year on year. This is rising for many reasons. One of them being that the majority of layoffs has been on low skilled workers, so the average earnings index will go higher. But still, this is an index that's going a lot higher than inflation. Now we have CPI tomorrow expected just under 2%, so the gap is pretty big. But you could argue that these are not regular times, so should put less.
Probably also another proof that inflation doesn't capture inflation.
Yes, that's true.
Price increases.
That's true.
Yeah.
We also had the retail sales in the US, which came in lower than expected. Same with the New York Empire State Manufacturing Index, but PPI was higher than expected. So kind of
everything was bad then.
Yes, exactly. and really, it's all about the Fed tomorrow. So, like Blake said, I don't have a position in dollars, and I don't want one in ahead of the Fed. I still have obviously my metals and miners positions, but nothing in the dollar itself. So, otherwise, market-wise, from in the last hour and a half or so, we haven't had that much. I mean, oil is still doing very well, and you had Goldman Sachs. Goldman Sachs came out today saying about an hour ago, saying, "Oh, it wouldn't surprise us to see $100 oil."
There we go. That's what I was missing, Stelio. I was wondering what's gonna cause like the top somewhere here, in crude. Okay, now you've given me the missing part of the puzzle. Okay, yes. Nice, thanks. Great. So guys, you understand what that means, right? Crude is really at the very, very last
and Blake said
part of its leg higher.
Blake said on FaCe that it's getting very close to resistance now, and I see you have it there too. So
yeah,
if you ask me, would I go long oil here? Absolutely not.
If the Goldman said 100, you should buy it here and hold it to 100, mate. It's as simple as that.
Yeah, well, it might get there eventually. The question is, how does it get there?
Oh, it will get there. But now that Goldman says it's going to 100, it first has to give a lot of pain to the Muppets that are going to be buying Goldman's recommendation before it actually gets there.
Yeah, true. And so what else? I mean, everything else has been pretty quiet. Metals are kind of dripping a little bit lower, but nothing really. Bitcoin, same.
I mean, gold and silver, nice recovery yesterday from gold from this like beautiful confluence of supports. Still, in my opinion, in what looks like a corrective pullback, same deal here with silver. Looks like a very nicely channeled move within the context of the bigger consolidation, which is like a big symmetrical triangle, or it looks to be one. Platinum still dripping lower, but definitely not in an impulsive fashion. Palladium, same deal. Copper, same deal. I know many people will point to today's move in copper being quite a sharp one, but technically speaking, that doesn't change absolutely nothing. I remember us when we were back there saying that we might break higher from there, or we might be in a more complex correction that's missing another leg lower. So far, I really don't see anything that's ultra bearish copper, platinum, palladium, or whatnot. All still within the technical context of corrective moves, and nothing to see there. Clearly, the Fed tomorrow will give us a more solid short to medium term direction in everything. And by everything, I mean, here's the DXY testing this channel trend line resistance. Unless it breaks higher from here, I have no reason to believe that this is not a corrective rebound. Here is the S&P that has kept creeping higher, but in what looks like an ascending wedge for the time being. So I definitely wouldn't rule out another leg lower before we finish some type of a complex correction. And you look at the rest of the FX world, for example, Blake mentioned before, I have a little bit of a different channel here with in comparison to what Blake had. According to my chart, earlier today, we tested perfectly this channel trend line support and held. So, in the case of the cable as well, I still haven't seen anything that constitutes anything more than a corrective pullback. So if tomorrow we get dollar weakness following the Fed, I think that the cable is perfectly positioned to rebound higher towards 144. Oppositely speaking, if for some reason we do get risk off and dollar on type of moves following the Fed, then we're going to see a nice breakdown from this channel, which is going to open the door for a deeper corrective move lower. Why not even back towards the 137 area? So, there's no question about it. Blake mentioned it, and I 100% agree with that. I doubt it that we're going to see any groundbreaking moves, any technical events prior to the Fed now that we've come close to it. But I do think there is a very, very good chance that the market that is seeking for direction for so many days now is now we got the CPI data a few days ago, we got the employment data. Now the Fed is missing, and after that, I think the market is going to be free to move for at least several days in one direction or the next. So let's see which is going to be that direction. It's going to be perhaps very easy to determine based on what the Fed says. I know that the Fed usually they try to micromanage, even the every single word in the announcement. So they try to steer as less volatility as possible, but still, you never know. I mean, if there is something in that announcement that the market is not expecting, or the market is not pricing in, or that's going to put some thinking in the market participants, we might see a move like that, right? So yeah, we will have to wait and see. Technically speaking, though, I do think that we're poised for some bigger moves, for some breakouts, breakdowns. Depends on what you're looking at. For example, Blake mentioned the USD CAD before, which I agree. I said yesterday as well that the USD CAD is looking like it's a very good candidate for a move. The Canadian seems to be weaker than the rest of the currencies for the time being. We're testing again this rectangle trend line resistance. We break out from there. I think we open the door for a move towards 124. So that's going to be a very nice extension higher towards a very nice confluence of resistances. So, we break higher from here tomorrow. Not bad. I mean, we have more than 200 pips of upside, right? Somebody can clearly say more or less the same thing about the USD NOK, although the USD NOK is still some distance away, both from support or resistance. But in any case, we break in either direction. We should see an extension lower or higher. Same with the USD CAD, same with the Aussie, same with the Kiwi, same with the Euro that is probably in a corrective pullback, but who knows? It might become like a more complex one. I talked about the cable already, that it tested support earlier and it held, and it will probably keep on holding until we get the Fed's announcement. I don't think that anybody's determined enough or certain enough about what's going to happen with the Fed to really put some money on a bet on which direction the market is going to choose to following the Fed. So that will probably more or less guarantee that we remain in this tight range. Anything else, Stel?
Not really. No, it's all about tomorrow.
Yeah. Fortunately or unfortunately, yeah. Can you see the PA one more time? Okay, I guess that's Palladium. Yes, absolutely. We can. Where is it? Yeah, there it is. Here it is. In my opinion, still in a corrective pullback, right? You see, there is more space to the downside. Clearly, I mean, we've had a massive move higher, but so far the pullback looks totally corrective in nature. So I think that eventually we're headed higher. Now, of course, there is always a good chance that we're going to see another leg lower towards the channel trend line support before that happens. Keep that in mind, right? But so far I see this pullback being corrective in nature. So if I had to buy it or sell it and hold, I would buy it instead of selling. Bye-bye, Gorkim. See you tomorrow, mate. Let me see what other questions. Look at SMH. Yeah, I more than gladly. Paddywise says crude. We already had a look at crude, but let me reiterate the numbers I gave yesterday. Let me repeat the upside targets. The upside targets are 72.5. We're getting very, very close to that, right? And the one after that is at 74.60. So those are the next upside targets. But as I said yesterday, I wouldn't be chasing crude oil anymore up here. I'm more than satisfied that we fulfilled the upside targets from this triangle. I mean, definitely we've fulfilled the minimum upside target. We've even gone a little bit more. And, you know, if we crawl higher towards 72.5 or even 74.5, I think then risk reward starts tilting clearly to the downside, right? So I think you bought the breakout of the triangle. It's probably the area where you should start offloading some of your longs. But of course, you know, I first want to see some type of a reversal before I say we've seen the high. But I do believe that sooner or later we're going to see a much deeper pullback, which has been missing for more than a year now in crude, before crude will be able to freely move to the upside once again. And yes, I do remain medium to long-term bullish crude. I do believe almost nobody believes that we're going to see triple digits. And if you remember, I said that I believe we're going to see triple digits when we were below 50. Many people think that crude is dead. I believe they're going to be totally surprised with how high we can go. But since you see, for example, Goldman Sachs, since there are a lot more people now being cognizant of the fact that, you know, crude is very well bid and might go higher, I think that now it's the time to start looking in the other direction for this market. We need to shake off weak hands that bought late, that came late to the party. You know, why do you think that Goldman is now advocating for $100 in gold? Because it wants to offload some of its longs to Muppet clients before they can buy them back at a much better price. So in essence, at the same time, I think they're telling the truth, but the timing they're using to tell the truth. I mean, they're telling the truth. I do believe that they believe that crude is going to go to $100. I do also believe that they want to get rid of the crude oil they currently have so they can rebuy it at better prices for it to go to $100, right? So you shouldn't be, in my opinion, one of the people that follow Goldman and any Goldman's type advice. You know, when the market starts gaining a lot of faith that, you know, one market is going in one direction, it's the time that you should start being, you know, very, very skeptical about that. And I think this is, you know, coming the case in this market, in the crude oil market. Now, okay, USO. Yeah. Yeah. Nice recovery, undoubtedly. There is a but. But the nature of the rebound is corrective. So far, you also see the divergences here, right? So I think you should be careful this one. Up here, I think it starts getting dangerous. mRNA, Moderna once again. So not a triangle. Let's see if it's a flag, right? Also be careful, we're backtesting this. You know, it's time for us to find out if this was an overthrow, in which case we're going lower, or if this was a legitimate momentum acceleration after breaking higher from here. So we're going to know soon enough. For the time being, the implications remain bullish for the time being. If we drop down within this channel, things start becoming, a lot more ambiguous. So, be careful with that. GRU. What is GRU? Yeah. Watch out this previous trend line resistance as support, right? So there you go. Support at 430, resistance at this trend line, and we're going to find out from there what's happening here. Probably a corrective move so far. So for the time being, I think no real reason to be worried if you're long, right? What's 430 for 28, whatever it is for 28, 430. And SMH, back at resistance. So, whatever we said in the past, same deal here. Yeah, there you go. Just extend everything. There you go. Once again, decision time for this market, right? We break through this trend line resistance. I think this is a very bullish development. You shouldn't try to fade it. We get rejected once again. We maintain this, medium-term consolidation. But, chances are in favor of breaking higher and following the existing trend. Any more questions, guys, girls? What is the target? Sorry, for which one? Let me see. Target for which one, mate? Which of the things you asked for? What is the target? Okay, the USO. Okay, let me see. Okay, first of all, if we get rejected from here, there is a lot more room for a pullback, right? We can go all the way back to 35 and still hold this channel. Now, upside targets. If we break higher from there, upside targets are let me see. So one, we have an unfilled gap at 69.80. We have this resistance area at 72.80. We have this high at, we've already gone over it, and 58.90. So 58.90, if we break higher, is the first upside target, if we break higher from here. And, downside support, the first one comes at 45.70. Okay. Now, risk rewarding, as we speak, is to the downside, right? Now, the medium-term trend for the time being is higher, but risk reward from where we are is to the downside. So I wouldn't be buying up here. If I was forced to trade it today, I would try my luck selling. MP. You see, still working out perfectly. Still holding this channel, so still no technical event here. So what we said when we checked it in the past, same deal here. We can still see an extension of this corrective move, or we can break out to the upside. Keep watching this channel, keep watching this horizontal resistance area at 36.70 for confirmation. I think it's, I think it's a very good chance that we're done correcting lower if you see a daily close above 37. I think it's probably a safe bet that you can buy. Until that happens, respect that we're still in some kind of a correction that's unfolding. Okay, so see you again tomorrow for the fireworks, and let's see what we get. I'm really crossing my fingers and hoping for some volatility, even if the Fed is not really in favor of that, but let's hope they give us something to, to move tomorrow. FSLR, okay. These, and we're done for today. Ford, okay. Now, Ford, bull flag, textbook, right? Pennant. And another one here. Right. So far, this is really bullish. So, as simple as that. FSLR. Oops. Corrective move lower, most likely than not. But not sure we're done yet, right? So keep watching this. Probably breaking higher sooner or later. There you go. Okay, guys and gals, have a wonderful rest of the day, and let's hope we get something to trade tomorrow, right? Bye bye, everybody. Bye bye, Stel.